Welcome back to another episode of Tax Tip Tuesday. On today's episode, we're going to be talking about how does an S Corp really save you money on your taxes? Well, hey there. I'm Kimberly Ferguson, CEO and founder of Emerald Expectations Accounting. I'm so happy that you're here. The Emerald Corner is a place where life and business meet. So I want to share with you how to have a growing and profitable small business while maintaining a life with your loved ones. Today's episode, as you know, is another episode of Tax Tip Tuesday. And Tax Tip Tuesday is where I share with you tips and tricks on how to get ready for tax season, how to save money on your taxes, and answer your specific tax questions. So if you have a specific tax question that you would like me to answer, please feel free to drop that in the comments below. I would love to make a video just for you. So as I mentioned in the intro, today we're going to be talking about how does an S Corp actually save you money, right? I know S Corps are super popular right now. They're going viral on social media. So how exactly does an S corporation save you money? Because I know there's a lot of confusion in that general area, right? So this is what I want you to think about. When you have a small business that's an LLC or a sole proprietorship, what happens is that money is going to pass through onto your individual tax return, and you're going to have to pay what's called self-employment taxes. Basically, when you have a traditional W-2 position, you have Social Security and Medicare taxes, right? And you pay a portion of that, and your employer matches whatever you pay. So the total between the two of these is 15.3%. However, like I said, you only pay half of that as a W-2 employee. As a small business, an LLC or a sole proprietor, you pay the entire 15.3%. And that is what is called self-employment tax, okay? So it's your Social Security, your Medicare, and then the employer matches on both of those you have to pay as the business, right? So how does an S corporation save me money? Caveat before I go into this is an S corp doesn't always save you money, okay? So if you're not sure if you fit into this situation or how it might help you, please reach out to your tax advisor, your tax preparer, or to us if you don't have either one of those things so that we can help you make sure that this is the right decision for you moving forward, okay? So as an S corporation, you don't have to pay self-employment tax. Caveat again, that doesn't mean that you don't pay Social Security and Medicare at all. It just means you don't pay self-employment tax, right? Confusing, I know. Okay, so as an S corporation, the IRS requires that you pay yourself a reasonable salary. What is a reasonable salary? That's vague. That's something that you kind of have to work through, make sure that you're being paid, a legitimate salary for what you're doing, make sure that, you're covering the time that you spend, the expertise that you have, kind of all these things. There's a lot that goes into it, but you have to pay yourself a reasonable salary, right? So what happens when you pay yourself a reasonable salary is that you pay Social Security and Medicare taxes, right? Because that has to go on a payroll. And if you're on a payroll, you receive a W-2, which we talked about in the beginning. As a W-2 employee, you have Social Security and Medicare, right? So you pay those taxes on the reasonable salary that you establish for yourself, okay? Now, the benefit is whatever amount you make over that salary in your business is no longer taxed under self-employment, right? So let's say that you make $100,000 through your business, okay? So let's say that your reasonable salary is $60,000, okay? So you're going to pay Social Security and Medicare taxes on that $60,000 because you're going to run it through a payroll system. You're going to have a W-2. It's going to do this Social Security and Medicare taxes, right? But the difference between those two, so the remaining 40,000-ish, you don't have to pay self-employment taxes on. So let's do some quick math. So if you're not paying Social Security and Medicare taxes on that $40,000, that is saving you $6,120 in Social Security and Medicare taxes, right? So that's pretty good. That's pretty good annual savings. Now, couple notes. One, like I said, it's difficult to determine what a reasonable salary is. There's no IRS regulation. It's something that we have to basically establish and then be able to argue in a court of law if that were to come, right? We have to be able to argue with the IRS and prove our case as to why you are paying yourself a reasonable salary. So you can't just pull it out of your back pocket and just say, I'm going to pay myself $60,000. You have to have legitimate research and reasons as to why you're paying yourself that rate. Okay. Number two, you have to run this through a payroll system. Like I said, it has to be legitimate, has to have a W-2 that you get at the end of every year, and you will pay those taxes on it, right? Number three is that doesn't mean that you don't pay federal or state withholding or income tax. You still pay income tax like you normally would on that money. Okay, so that doesn't go away. This is only your Social Security and Medicare taxes that you can decrease. Okay, so does an S corporation save you money? Potentially, if you're making more than you would have to pay yourself as a reasonable salary, then it may be worth it for you to switch to an S corporation. However, keep in mind, S corporations have a lot more legal requirements. As an S corporation, you have to have annual meetings with your board of directors. You have to have a board of directors. You have to take corporate minutes at those annual meetings. You have to do annual renewals of your entity. You have to do a separate tax return. A corporation has a separate tax return. So there are several additional requirements, lots of documentation, additional returns, additional processes that you have to follow as an S corporation. Okay. So one is switching is not for the faint of heart. And two, it's probably something that you should do with an advisor, somebody who knows what they're doing, right? It's probably not something you should just elect to do on your own and try to manage all of that on your own. Now, I know this is very complicated, so if you have any questions and you want to schedule a time with us, I will go ahead and link that below for you. But otherwise, thank you so much for spending a few minutes of your time with me today. I hope that you have a fantastic day, and I will see you in my next video.